This is Brandon Christy, President of Christy Capital Management. The past several weeks have brought challenging news for all of us. The coronavirus outbreak has dominated the headlines and, quite frankly, our lives. First and foremost, we recognize the toll this has taken on so many people. Our thoughts and prayers are with those who are impacted by this virus, either directly or indirectly. As we navigate these challenging times together, I wanted to take a moment to share with you a few thoughts about the current market correction we are experiencing. Here's a quick refresher. A correction is defined as a decline of 10% or greater from a recent high in financial markets. Corrections can last anywhere from days to months, but few have lasted longer. Recently, we've seen a bumpy ride, and I wanted to reach out to you to give some context on what this might mean for you. Stock prices have bounced in and out of correction territory as investors attempt to measure the economic impact of COVID-19 virus. During periods of volatility, it's important to remember that stock market corrections are not unusual and represent a normal part of the investing cycle. There's little doubt the coronavirus represents a challenge to the global economy. Already, we are seeing a coordinated response from healthcare organizations and federal agencies. On March 2nd, the Federal Reserve cut short-term interest rates by 0.5 point, and the International Monetary Fund and G7 officials pledged to support economies impacted by the outbreak. While significant market downturns can certainly be unsettling, it helps to view corrections from a wider perspective. This is the 7th correction the stock market has seen within the last 10 years. You may remember late 2018 when the market benchmarks fell nearly 20% when the Federal Reserve continued to raise short-term interest rates as the U.S. economy strengthened. In fact, if we widen our gaze further, we can see that this is actually the 27th market correction since World War II. Past performance can't predict future market results, but markets have still managed through the process of price corrections. Corrections remind us of a reality we don't like to think about. Stock prices can't always go up. When prices drop, it can be tempting to give in to our emotions and react, but patience and caution may be warranted. Your investment strategy has been created to reflect your time horizon, risk tolerance, and goals. As an investor, getting through a correction means having the poise to ride out short-term volatility. We are paying close attention to the market developments and are managing your individual portfolios accordingly. In the meantime, feel free to call or email your Christy Capital Advisory team if you have any questions or concerns. Please stay safe, and thank you again for the honor to serve you and your family.